Sounds like there's no liquidity, Lawrence, and the market makers want a sure thing. All right, good morning. All right, so we're getting a little break of support this morning, and to different degrees. And as always, we can see how far things go. All right, good morning. Mute that, hold on. So, it began last week with the initial breakout failure that occurred. The pop up there and came back in again. Yesterday's topping tail, and now this morning it's pulling back. So no real damage done here other than creating uncertainty. Anytime you see this pattern, it's going to create uncertainty. Whereas prices were consolidating with an uptrend. We talked about it being wide and whippy here and had to tighten up. That was part of our discussion last week. It did tighten up, which set up the move to new all-time highs. And that's exactly what happened. And it was rejected at 4,200 and 180 reversal down, a confirming topping tail. And now it's breaking support. And there's really little to stop it from going lower. Now that it's broke these levels, since it's gone straight down like this, a little semi-climactic, the momentum is slowing on the 5. Maybe it just kind of hangs out here, waiting for the open to see if it can retrace. And so just squeezing that together a little bit, you can see that consolidation over the last few days and the rejection and retest. In a little bit more detail, of course, when we go to an intraday time frame and then multiple attempts to move higher, failure and the lower high, and now the break, and it's into the void. So theoretically, it comes all the way down here because there's nothing to stop it from getting there. There's no price support to the left. Any moving averages you put there are irrelevant. Any fib lines are irrelevant. Any VWAPs are irrelevant, and so on. You've got a rising 20 MA on the daily chart, but what you can see is around 2150-ish or what have you, and there's just absolutely nothing to the left. And what makes moving averages subjective as reference points of where prices will stop. That doesn't mean they don't, because institutions follow the moving averages that we use, and 20 being, I guess, the least significant since it's the shortest, and 50 being much more significant on an intermediate term basis, and then, of course, the 200. Now, that being said, prices can create support. And this was, once you learn one concept like a price void, it leads to a thought. And that's why at Master Trader, in our courses and when we talk about our analysis, we call them thought building lessons, because this is what a chart trader is about, using price action. Well, if you use indicators, it produces thoughts, but it produces erroneous thoughts that are misleading. With price action, you can't control the price action, meaning you can't change, like you can change indicator settings or different indicators, or use exponential moving averages versus simples and different lengths and so on, which moves things around, which common sense says, hey, wake up. You're moving this stuff around, and now all of a sudden support and resistance is moving around. A little common sense here, folks, and that was one of my aha moments as I looked at all this stuff years ago. And, it was like, hey, how does Dan say it? McFly, like it was that idiot in that movie. And look at what's going on here. So, but what can happen is these pivot lows, as prices come down, it can create support before it gets here. So we needed another thought that could guide us as information would change. Now, at the moment, with this time frame, the thought is it's coming down here until proven otherwise. If it pivots, and then that pivot is retested, like it, here or here, if buyers can step up and then retrace it far enough back up to a pivot high, retracement analysis begins to change our bias as well as the pivot. So at this moment in time, we're looking for this to go lower. I'm well aware that the 20 is there. It's subjective. It could come into play. So we'll just see what happens there. All right, let's take a look at some of the others. Let me get my little red dot out here. I love the little red dot. So let's take a look at SPX for a second. It's not SPX day, but you don't get the gaps too much unless it's a Monday. And so now futures breaking down here, you're going to get a gap down below this level of support. Now, when you're trading the S&Ps, the futures, you got to be aware of what's going on in the cash market, or actually, the spiders, the ETF, as far as the gap, because this gap down now creates a void above. And while it's breaking here, it could bounce back up. Now, what we'll look for in the first, 15, 20, 30 minutes or so is, while it's gapping down here, can it go up and fill the gap? How far might it be able to retrace, or the lack thereof? And so spending 30 minutes down around this level and the inability to go up reinforces the thought that it's going to go down. Because as it goes sideways there for that amount of time, it then begins to create new resistance. So that's something else to keep in mind as we analyze what's happening here today. We've got all this sideways price action. Prices are breaking lower. And, and the thought is that it comes down here. And should it do that, at the end of the week, we're going to have a bar that's down below this little topping tail bar. And so while in an uptrend, it begins to reinforce that, hey, market's going to correct here a little bit. It's still in an uptrend. We'll see if it violates this pivot low, because if it does, then this is no longer in an uptrend, and it opens up the door to this void below. We're not anywhere near there yet, but look, this is what we're looking for. And if prices should come down here and rip right back up, well, that's the thing. That just continues the thought process of, well, hey, we got down to this target area. What happens there? And so this is what we call the factory work: support, resistance, trend, multiple time frames. Does the trend break? Is there a price void? How far is the retracement? So on and so forth. And relative strength and weakness. As we can see, tech has been under pressure with the whole idea of inflation and interest rates. And now we've got a more serious violation of price support. Now, this is breaking in the concept we call a greater than 100% retracement. This is pre-market, but that concept says after a greater than 100% retracement, the expectation is for momentum to stall. Now, this is moving down for several days. So that's another thing to keep in thought. And, you can, and here's the reason why with this particular instrument is that, as I said, it's been falling for several days. So it topped out here, right, broke the lows. It couldn't get back to the highs. It's creating these pivots, right? And then it starts down to the next reference point location. Now, basic technical analysis 101. What was support becomes resistance. Look to the left and back down. Now, the pivot low being so close, maybe it holds here and it begins to rally. It didn't happen. So breakdown. So, and this has been traveling for a while. So, you could think that, hey, this is maybe getting tired. It's ran a long distance. This is the idea of greater than 100% retracement thinking. There's always a thought process behind our analysis. And so while that might bounce, part of the process is now drag this down here. Can prices get back above that pivot? So the simplification of support, resistance, by looking to the left, and trend analysis, where's the next location, and a step-by-step process simplifies our thought process and what we do here. Right? So will it hold here? I think it's unlikely, but I think it's a stopping point along the way to the destination, to possibly the 50 MA. And that 50 MA is kind of in the middle of nowhere as well. It's got this minor support, but again, there's a lot of time before this would get down there. And that's why we're here every day, reviewing and see what we thought would happen, what actually did happen, where might things go now. You can see here pre-market, it's buyers are stepping up here. So the greater than 100% retracement, there's the kind of price action that would be expected. Higher time frame, breaking the prior low after traveling that far. Smaller time frame, beginning to build pivots. Can it get above? Do you want to do counter trend trade? That's a choice. Right? Gets above here, it's going to retrace some distance. It's not a trend trade where the expectation would be for a big move. Right? But this is more of a concept of what we look for a scalper type of a move. And when I say scalp, I'm not saying, hey, you know what, we're going down to 1 minute charts or 30-second charts and looking to grab a couple of ticks. That's kind of crazy. All right, so that's what looks like to be the next location down there. It pops up a little bit, and then of course, can it get back above that pivot high now that it's a little extended from there? Russell. Last week we came in thinking, hey, this has the ability after this breakdown failure to reach the old highs, and it got rejected. And it's just a mess. I mean, the 20 and the 50 are converging here. You can see this support, that's a little congestion that's over here to the left. And, just on a side note, as far as different indicators and types of analysis where individuals will look for what's called a point of control. And what do they call that? A thing that's supposed to tell you what support and resistance is. Anyway, it looks at patterns, and it just simply looking to the left for you. Market profile. Thank you, Dan. And where it forms like a bell curve. And then, if I was to even put it on here, you'd see probably how it lines up exactly there as a point of control. So I've looked at all of this stuff over the years, and it always comes back to look to the left. Come on, McFly, don't complicate things. Of course, this is a bell curve, and now it's coming down to where it spent a whole bunch of time before it went up. And that's interesting how it lines up where the moving averages come together. All right, now bonds are going up. Right? So they started to perk up here, which means interest rates are going down. And, it's where the markets kind of had their little hiccup, which is really opposite of what we talked about yesterday. And that, interest rates possibly getting above here and that freaking the market a little bit. Whereas, hey, they're dropping back down towards support, and equities are, if this is why, equities are reacting in a more negative way. I mean, yesterday, if you lined up, and we did this in the green room, if you lined up the move in TBT, it was exactly where it started to move up, and the markets went down. So markets our markets. And, you would think that they're just set up to try and confuse you, but sometimes things are just confusing. They don't line up. And these correlations kind of come in and out of sync. But doesn't mean we're going to stop looking at it. So 10-year bouncing up here a little bit. Got a pivot high right here. This could be tricky the way, this starting, it looked like it was going down. Pivot high here, buyer step up, pivot high there, which begins to create, a trading range. That's what's going on. And so indecisiveness, what happens when it gets there? Does it come back down? And now there's support there. So it just seems like we're just going to have more of this erratic price action. Oil continues to do well. And, this is part of what I've coined the corruption trade. You can see oil, how it was rolling over here, and lo and behold, election results. American workers start getting fired shortly, not too far after that, and oil is going up. And while there's this pivot high here, uptrend, you would think it's going to keep going through it. And, if you're not looking at the price of this, just look at the dial when you go fill up your car. You see what's going on there. Gold had a good day yesterday. It's consolidating, continues to regroup after this long correction into this major support area. And so maybe it's got a little bit more work to do before it could really pick up some serious momentum, but it's certainly shaping up. And silver, right? It's messy, but what a power day, right? Wide range bars, fill 1, 2, 3. It's got room up to the next resistance area, but clearly, gold and silver are starting to act like they did, right, back here, where they're improving. They left a big mess behind to the left, but look, this is the concept of, look, it traded, above and below all of this. And so while, there's definitely something directly to the left here, all of this sideways price action is supportive to think it can, get back up to those highs and maybe beyond. So we'll see. And amazingly, yesterday, the transports made a new all-time high. So, just continues to be the outperformer. It looks great. Nothing to stop it. It's just no wide range bars occurring. As a wide range bar occurs, it signals the end of a move. So as far as that bearish type of price action that we're seeing in tech, there's opposing forces like bullish transports that, really suggest that whatever the correction is, it doesn't seem to me that it would be anything of, to be really worried about something more serious happening here, 15, 20, not 20%, but hey, we wish this market would correct a bit, and coming down even to the 50 MA would just be a great opportunity. Internals just continue to be in the middle of nowhere. I've explained that this in the past would be a bearish level, but it's kind of what's been the new normal of neutral, hanging around here. So if this correction is going to continue lower, what we want to see is this sentiment tag these lower bands. And, historically, coming down here would be a great buy signal, but that certainly doesn't seem like it's in the cards for this market at this time. And breadth is just dead neutral. So, correction, tech is going to continue to correct. Other things still look pretty good. So overall, pick the right things, and if it's not working, get out of the way, because we don't know how severe the damage could be. Markets can correct 5% and individual stocks can lose 20, 30%. So, don't look to the market, so to speak, as a measure as to what the stock you're trading might do. I've seen plenty of stocks get decimated in what would be considered normal corrections within the broader markets. All yours, Dan.
Morning. Yeah, I don't, does anyone, not that I care, but just for the talking point, even Joe Kernan was saying he didn't know what was going on with the weakness today. And he's like, oh, we're scouring the news desk. He didn't know what to point to as the reason. Jose, ALN, info. It is a 1-2-3, but we don't buy 1-2-3s far from the 20. Although it's a very bullish 15-minute chart. So day trade over yesterday's high. That's a powerful move, all time frames. Orly, up 3 bars, strong uptrend, need a pullback. Info, index. Strong uptrend, 1-2-3. Once again, getting on board moving train, but anything that's showing relative strength today with the market gap down with a bullish pattern, those are the things that we're interested in. So if info can take out yesterday's high, sure. Yeah, NVAX got hammered yesterday and it's weak again here today. EXPD had earnings. I went through and I cut a bunch of earnings just because I did the first run through because there's so many of them. This one I like, relative strength, strong sector. We'll wait 10 minutes. Our open positions, Rita, Splunk, into the close, I said, it looked fantastic. I got us into 3 other shorts, so I was kind of waiting for today to short under yesterday's low today, and it's gapping down a couple bucks. We did TDoc, so TDoc looks fantastic short. Gave Baidu short, got from BAT21. We gave XLK Technology short, nice M top. We gave Adobe M top, that's gapping down. So I've tightened the stop to all those, all of them break even, and we'll cover a third position over a 15-minute bars high, and then just manage in between. Yeah, John, I like Kernan. All right, wow, Maxer's getting creamed here. It was another bottoming pattern, but see why we don't hold over earnings? Gapping right down here to the 200. We'll come back to it at 10 o'clock, see what it looks like. Ballard, this thing could never get off the mat. Now remember, we recently did MT Live trading bottoming patterns. So this one never gave us an obvious, what we call a something something bar. This is a big descending triangle at the 200. It couldn't bounce. I mean, this could have been the start of it because this was a deep retracement. But, now it's getting whacked again. I guess, I don't know if it's earnings or not. Jobs, I just saw this thing going by the ticker and it's gapping up to the 200. Nothing to do with it now, though. Smile Direct. It was in the news for something or other, but that's a bearish gap. APPS fast. APPS looks lower, and it's kind of a bear flag looking thing here, gapping down this, maybe 30-minute low. Ship, yeah, these are the ship. These are the container company ships. They trade very volatile. I don't know. It's a watch. Yesterday was a good bar. Fast and big. Fast. Yeah, well, I had that on my list Friday. We were watching it all morning. And you can see right here, it had a bullish 1, 2, 3 continuation Friday morning. And the only reason that we didn't buy it was because the market was in a bad mood. And then it finally gave it up. But I like yesterday's close. And the weekly, monthly look good. So that's definitely put it back on the list. Mr. Big, I don't see where it's gapping. It's in a trading range. Oh, the CVS had earnings. So I want to keep an eye on this too. I'm going to put it in the window. CVS, and then I also saw PA. There's only one print up here at 29, but if that is a good, well, it's low volume. TA could be a gap breakout. DD, well, now it's gapping down. So nothing to do there. iRobot, bearish close. So it looks like the bears who were in yesterday's bar on volume are getting paid now with the gap down, holding over earnings. That's a big gap. Adobe, this one we're in, I mentioned on top. Zulu India, no pattern. These are earnings stocks. No pattern, although it's a breakdown. Sanmina. I see one print here at 40 bucks, but that doesn't have a lot of volume. But my bias would be down on this. Down, it's rolling over. You had this upside shakeout. You got the 20 MA rolling. You got a pair below. Rambus tips have been weak, gapping down a little bit, but we don't short after 5 fluid down days. Look at SMH. Yes, the SMH is cracked yesterday. Foxtrot November. It's a bear 1, 2, 3, but when the bar is so big on support, I'm not interested in these unless they can go sideways a few more bars and prove to me that they can't bounce. A lift I looked at yesterday and it was kind of similar. See, like this. This is perfect. Well, this one's even better because it's cleared major support. But wide range bar, you give me another inside bar or two, and then I got a bear on 1, 2, 3 on the weekly too. Let's keep an eye on lift. HBI, CYH, HBI. There's nothing to do. It's just going sideways. CYH, rally to resistance, inside bar, not crazy about it. I believe we can find better. Square, SFM. Square, that's a gap breakdown. That looks lower for a day trade, maybe 15-minute low. We had PayPal. One of these has earnings this week, but yeah, PayPal was kind of an M-top. Yeah, I think it's this one because I was going to do a call spread on this, but I think it had earnings. So that was PayPal, MU. 30-minute low. It's right there at that prior low, but it's rolled over daily, weekly. Look at the monthly, has a lot of air below. So 30-minute low on MU looks fine. CVS is strong, but it is it actually broke out yesterday. But I don't chase these things after a fluid up move unless you get a day trade set up. But it's strong. All right, there's some buying right here at the open, so let's see how far it can go. Moss. No pattern, bearish gap though. Are then a strong uptrend. Can you believe that, Greg? We talk about all these doubles and triples from the Corona low. But look at this thing, Greg. This thing friggin' doubled